someone who understands both worlds very well. Jeff Chowdhry, Senior Portfolio Manager of LGM Investments, joins us on the phone line. Jeff, well, I guess you've read the exit poll numbers. BJP expected to win in both Gujarat and Himachal. We are forgetting that state. Your first reactions as a long-term investor?
I suppose the first thing I should say is we tend not to react to politics too much, in the sense that we typically find that, if you look back over long periods of time, politics tends to have a short-term impact on the markets, and longer term, it's the companies that you invest in rather than the political. Having said that, I suppose in a perverse sort of way, it would have been quite good if there was a shock. And the reason for that was not because I'm either a supporter of the BJP or Congress, is it would have probably led to a market correction, and it probably would have led to some stocks coming back to better valuation, which would have given us a better opportunity to add to our positions. And so in a perverse sort of way, these sort of exit polls indicating, as you say, a BJP doing quite well will probably make the market continue to be firm and give us less opportunity to add to our positions.
Well, Jeff, you're not alone. There are plenty of investors who've been waiting for a correction in this market to add on to positions, but that correction has just not come. It's possible that if the Monday results mirror the exit poll results, there will be new highs for the Nifty, but you won't be a buyer because of the valuations. Is that correct?
Yeah, I think so. I mean, that's, as I sort of mentioned a few months ago to you, is, we're a bit concerned generally about valuations in India. Obviously, the valuations have been led higher largely because of domestic mutual funds this year, not by FIIs. As I say, there's very little value for us in terms of putting incremental money to the market. We're still happy with our long-term positions in our coal stocks, but frankly, it would be nice to have a 10 to 15% correction in some names to give us the opportunity to add more. But as I say, we wouldn't be interested really in adding much more to the market or to individual stocks, should I say, at this point in time.
Okay, Jeff, morning. What about the long-only funds? How would they interpret this result? As a bit of a surety of the BJP getting second term in 2019, and would that influence their buying?
Yeah, I mean, I think because obviously there has been a little bit of concern that the BJP may not do that well. I think if they do well, as the polls indicate, I think certainly the people who have been sitting on their sidelines with cash and really, I mean, domestic mutual funds more than anyone else, I think they'll take that as a good green light to add to their positions in the market at this point in time. So as a result, I think the market would probably go up. But I think that's just again, it's a very, very short-term view. I still of the view that the fundamental issue is that a number of stocks, a number of sectors are overvalued at this point in time, and I think liquidity, momentum, chasing are not good basis for long-term investment returns, to be honest.
Yes, you've made that absolutely clear, Jeff. But you don't see any pockets of value?
I think, we tend to focus our attention on very, very well-run companies with great management, with sustainable cash flows, which we can focus on for the long time. So what that basically means is the consumer sector tends to be a very big proportion of our portfolio. Okay. And, it's very difficult for us at this point in time to find any great value in the consumer sector. Okay. I mean, there's a couple of stocks which I think are reasonable value at this point in time. I think ITC is quite good value here. I think Colgate is reasonable value here. But certainly by no means are they screaming buys in the portfolio. And that's basically the fundamental problem that we have at this point in time.
Okay, so ITC and Colgate are stocks that you like. We'll keep that on our screen for now. But the other pocket that's got everyone's fancy these days is the PSU banking space. In fact, the finance minister tweeted only yesterday that reforms for these banks is a priority. Do they hold any interest for you?
Oh, very much so. I think I would the area of interest for us is the fact that finally, after many, many years, everyone knew that the PSU banks in particular had this big hole of bad debt. which frankly nobody wanted to recognise. Now, with the recent announcements from the RBI, for example, and obviously with the government, I think reality is starting to dawn. They were undercapitalised. They needed to be supported. That first stage of that has happened. If there's more of that to happen, I think that's good for two reasons. First of all, it means reality, and reality is good rather than the opposite of that, whatever it is. And the second thing is it's good for the whole banking sector, not just for the PSUs, but I think for banking as a whole. And a strong banking sector in any economy is really the bedrock of a strong economy. So I, welcome the fact that they were recapitalised to start with. And if there's more reform in this area, I think that's really good news.
Okay, and generally, do you believe that the government with a stable majority for the longer haul can attempt some more reforms like direct tax reforms?
I mean, we've always had a very deep interest in India for a very long time, so that's a kind of given. But it is fair to say that the reforms of the last couple of years, particularly GST, are long-term positive. That is unequivocally clear. Obviously, demonetization, a lot of people sort of, worried about the implementation of that, and there were some concerns about it. But I think net, it was a pretty good move as well. So if it means more reform, if it means more transparency, if it means more people paying taxes, I'm afraid that's a good thing for the Indian economy.
Okay, well, speaking of the economy, is growth, either earnings or GDP, a worry for you?
No, I think we don't sort of worry too much about short-term earnings numbers. What we sort of focus on is long-term cash flow and long-term cash flow potential, and that's the key. For sort of quarterly numbers go up and down in terms of the economy. As I say, valuations are a bit high at this point in time, and earnings do need to catch up with those valuations. So, as I say, we're probably just going to be sitting on our hands for a little while until the valuations, probably because of the earnings growth, come back to more reasonable valuations. But by no means are we exiting India. We're long-term bulls and we'll continue to be here.
Okay, Jeff, thanks as always for stopping by. So not chasing the momentum in this market, waiting for the valuations to get a little more cheaper perhaps before taking that next move. But still a big bull in this Indian market. Let's talk about some stocks now because there are plenty to look at today. Our research team is standing by to give you that very list. Let's welcome them. Anuj, what's on your list today?
So, it's a no-brainer as we discussed in the first segment as well, HDFC Bank. And, I want to touch upon a couple of points here. One is that it's the captain of the index, the Nifty and the Bank Nifty, and it's corrected a bit from its highs. So that may lead the market to new highs at some point. The issue for HDFC Bank from here on would be, of course, they're getting the QIP done, and there's a good chance that QIP happens at a price which is higher than the current market price. But in terms of demand, you'll have, of course, a lot of domestic funds which would want to participate. Going forward, the big story for HDFC Bank would be, though they have tried in the past, but they've not been successful on getting that HDFC stake declassified as FI holding. I think that really is an issue for HDFC Bank because otherwise it keeps getting into that FI caution list. It is still there, though there's a good chance that it goes out of that after this QIP, and also because of those fresh ESOPs. So that's something to watch out for. And the other stock I'm watching out for is Mahindra and Mahindra. It's a stock which saw huge delivery buying yesterday, and the valuation wise it's among the cheaper auto stocks. So it's, after long underperformance, starting to sort of outperform a bit. So that's something to watch out for.
Actually, you're right, because yesterday Ron broke that story just as markets were closing, that the government is speaking to a bunch of OEMs to ensure that royalty is not paid out too much, that it's retained in India, just for the Make in India program. And therefore, even because of that, you could see the auto companies getting a leg up. But let me just continue with that HDFC and break it down into numbers. Abhishek, the HDFC Bank QIP and HDFC stake sale?
Well, Lata, HDFC Bank will hold a board meeting on 28th December to consider a fundraising program. Now, my sources tell me that the bank is looking to raise close to 20,000 crore via QIP, and that QIP may take place in the last quarter of this fiscal. The proportion of capital raising will be done as per the current shareholding. So if you look at the current shareholding, the promoter stake is at 25.7%, while the non-promoter or the public stake is at 74.3%. HDFC Limited has also informed exchanges that they will hold a board meeting on 19th December to consider a fundraising. Now, this fundraising they have clearly mentioned will be to participate in HDFC Bank's QIP. Back to you.
Okay, Abhishek, thanks a lot for that. Not just HDFC Bank, but PSU banks could be interesting because that's the high beta space, and there's a good chance, Lata, that we have a bit of a rally today.
Yeah, and also there is space created because we saw a goodish bit of sell-off in PSU banks. They almost came back to the recapitalization day. Therefore, the statement that came from the finance minister, I could read the quote, fixing the banks and completing the unfinished task of strengthening the public sector banks, I think is unquestionably the most important agenda on the table today. We've already announced a detailed recapitalization plan, and the idea behind is to ensure ability of the banks to support growth in their lending capacity. So, that clearly indicates from the FM speech at the FICCI AGM that this will come sooner rather than later. So today that's an additional leg up for PSU banks.
Okay, well, we'll be watching out for some stocks based on international news as well. Zee Entertainment is on our radar. That's because Walt Disney, as we all know, has decided to acquire 21st Century Fox Films and Television Studios. So what kind of ramifications would that have on the industry as a whole? And why are we looking at Zee, Sonal?
That's right, Sonia. So, well, yesterday, Walt Disney acquired 21st Century Fox's television and studio business, including their Indian subsidiary, that is Star India. Now, it brings the Indian media industry under focus as it has been growing at a rapid rate, and the analysts expect it to grow at around 15 to 18% in next coming years. And it brings in focus some of the media stocks like Zee Entertainment, for example. But we'll have to see how the deal really turns out to be, considering the over-the-top platform like Hotstar. And there are a couple of other things we'll be watching out for. And the second reason why I'm watching for Zee Entertainment is because Motilal Oswal is quite bullish on the stock. They've raised the target price to 690 versus 630 earlier, as they expect that Zee Entertainment will be giving the highest ad revenue in the industry. Back to you.
Okay, Zee's anyway been on a high. Thank you very much, Sonal. Ronit, a bunch of results.
Yes, Lata, as the results keep coming in. So I started Link Pens, weak set of numbers coming in. Revenue was down 6%, but the profit after tax was down more than 61%, largely due to a higher finance cost as well as depreciation. Moving on to the good numbers, 3 textile companies. I'll start with VIP Clothing, a good set. Revenue up 12%, as well as the margins expanded by 320 basis points. And they reported a PAT versus a loss last quarter. Moving on to Indian Terrain, good set, another revenue up 18%, EBIT up only 3%, margins a slight downtick, but the PAT was again up 18%, largely due to reduction in the finance cost as well as the depreciation. And finally, Dornier Industries, the stock has been very volatile in the last 1 week. They came out with a rather inline set, revenue up 5%, margins up 160 basis points, as well as the PAT was up 58%.
So, just to repeat the big trigger, the BJP is being projected as winning Gujarat elections, and handsomely. So that's what the SGX Nifty is reacting to, despite adverse global cues. The SGX Nifty is up about 80 points. Yesterday we ended, of course, at the high point. Sudarshan Sukhani, Mitesh Thakkar and Prakash Kaba now join us. Good morning, gentlemen. Sudarshan, how would you approach the index today? If there's a gap up of 80 points, is there a trade left, or do you have to wait for some cool off?
Yeah, good morning. Well, we approached the index yesterday when I said that we will go long yesterday morning, not today, and we have the courage to be long. So that was the real trade, and I think anyone, including me, who are long in this market are benefiting from that gap up. Now today, there is still an opportunity to buy on a dip or even buy whenever you feel like, because Anuj, we are now coming very close to that same 350-400 resistance, which has held on for on four different occasions. If the 400 resistance breaks, if not today, then maybe on Monday morning, then I think this market is heading towards lifetime new highs. We have to bank on the fact that the markets are pushing against 400 repeatedly and finding support at lower levels. So the view is, if you took long positions, and you should have yesterday, take profits partially at least, hold on to wait for a break, anticipate a breakout above 400 today or tomorrow, whenever, I mean on Monday. So stay with the long positions.
Okay. Well, congratulations, Sudarshan. You definitely were unambiguously long yesterday. A positional long, which I'm sure is going to pay off handsomely. But Sudarshan, would you bank on the Bank Nifty more today?
Yes, Lata. I think the Bank Nifty will now perform at least as well. Yesterday it outperformed, and it could easily outperform or even at least match the Nifty's pace. Today it may not be a big run-up after the gap up, but I would feel that markets will consolidate. and both indices are buying opportunities.
Okay, well, let's get Mitesh Thakkar and Prakash Gaba into this discussion as well. Mitesh, what's the call? I mean, it seems like a given that we would see a gap up opening today, but what about the rest of the day?
So I think yesterday, we saw the Bank Nifty again recover from levels of 24,950. It's kind of tested those levels on multiple occasions, gone below that and always managed to close above that. I think that's the time when we cut our short positions, took marginal long on stocks. My sense is that I think, as Sudarshan also highlighted, the Nifty could open close to about 10,330, 350 zone. So immediate buying is not advised. If we start getting past 10,350, then you could take long positions or wait for that intraday dip of 30, 40 points to get long.
Okay, and Mitesh, good morning. What about the Bank Nifty? How would you approach that?
So I think the Bank Nifty, Anuj, my sense is that I think, we will see a range of about 24,950 to about 25,500. We might open close to the upper end of the range. So again, not buying immediately. But while you might avoid the indices because of the gap up, a lot of stocks which might reverse some support levels or give intraday buys could be on the radar. Bank Nifty I would buy only if we start getting past 25,500.
All right. We'll come back to stocks, but Prakash, good morning. How are you trading the Nifty?
Nifty, good morning to you. Well, I would say that Nifty, yesterday we saw a very good geometry at 10,140. So bottom is out here. The next technical target is on the first is 322, which looks like it will get passed. And the next logical target beyond that is 10,344. I think it's heading up there. So it's a matter of time. It goes there, buy today and hold it for a couple of days. Intraday point of view, I would say wait for a first correction. If you get a correction, buy it. Otherwise, let's see after 1 hour or so, get a breakout and buy it. The target would be around 10,431 in a day or two. When you look at the Bank Nifty, I think it's formed a good base out here. It's heading to levels closer to around 25,400. It's a matter of time.
Okay, Sudarshan, in your stock list, after a long time I'm seeing Reliance. Correct me if I'm wrong, but do you think that has the momentum now to move forward? And what else are you looking at?
Yes, it does appear after a consolidation that lasted for almost 3 months. Reliance is giving the first signs of willing to go higher again. It has been an outperforming stock and that consolidation was simply a pause. So today I would feel that Reliance is one of the best buys that we can look at, and these are not day trades. You must carry them and take the risk for a Monday result event. Then these trades will really benefit us.
Okay.
And then you have Ajanta, of course, which has been, I think, one of the fastest wealth generators.
Yes, I have Ajanta as a buying opportunity for the day. It already broke out from a very nice, attractive base. Now it's having those large rallies, then 3-4 days small pause, and then what I assume will be a resumption of that rally. So Ajanta is a buying opportunity, and we just heard you talk about Z, and that was the news. But on the charts also, Z is on the verge of a breakout. That breakout should be coming. So we want to be positioned in anticipation of an upside breakout again. That's a buy. Finally, in my buy list is Hexaware Technologies. The stock is in a trading range. A small flag-like formation tells us that a breakout is imminent on the upside, and that could lead it much higher. One short sell, and that is simply to balance it out. I don't think we should be short today. BEML, which is going through some kind of a correction, but primarily expect consolidation and be on the long side.
Okay, fair point. Mitesh, what about you? What stocks are on your list?
Yeah, so I have buy calls today. HCL Technologies is the first call. I think a good candlestick pattern there yesterday should suggest or should see some good follow. Buy with a stop at 871, look for targets of 905. HPCL, and yesterday we had a call on IOC. I think the OMCs have given a short-term reversal on the chart. So HPCL is a buy. Keep a stop at 430, look for 455 as your target. Dr. Reddy's, after that big news, took two days of consolidation, but now is showing signs of an upward movement. So buy with a stop at 2270, look for 2385 as the target. My fourth stock is Gen Irrigation, which has given a good pullback and is now trading very close to very important key support levels, likely to bounce back. Buy with a stop at 108.5 for targets of 116. And Kotak Bank, which never fell actually in the correction, has also given intraday buys yesterday. So that's a buy. Keep a stop at 1010, look for 1050 as the target.
Okay, and Prakash, okay, HPCL seems to be a favorite. You have HPCL on your list as well?
I think crude price decline, dollar strength is all going to make oil companies attractive.
Yes, certainly. HPCL looks like a good base formation out here. And the way it's trading looks like it can very easily climb to levels close to 455, stop below 429. I like Fortis as well. That's formed a good base here. More of a pullback out here, and the pullback could last until 140, 42 zones, stop below 131. Godfrey Phillips looking basing out pattern out here. The target on the upside on Godfrey Phillips is 1030, stop below 980. And finally, I like Grasim. Again, a base formation, a good candle that I've seen. Target on the upside on Grasim is 1180 zones, stop below 1120.
All right, gentlemen, thank you very much. We still have about 10 minutes for the markets to open, so let's get more expert voices. Dheeraj Sachdev of HSBC Global Asset Management joins us now. Good morning, Dheeraj. Thanks much. Even if there is a gap up, do you think mutual funds like you will have to chase momentum now because a much anticipated dip is not coming?
Well, good morning, Lata. I mean, we don't tend to chase momentum. We are largely fully invested and we are very stock specific. So while the exit poll may have gap up opening today and obviously can sustain the rally even on Monday if the actual results match the exit poll indicators, our sense is that in the near term, the markets will revert back, maybe in the next week itself, revert back to taking cues globally from global markets as well as domestic earnings. So while exit poll will have very probably very short-term kind of a reaction over the next couple of days, it will be business as usual where the market will start taking cues globally, etc. From a market perspective, in the near term, we do expect that it should pause or take a breather or even a marginal correction post these poll-related knee-jerk reactions, given the fact that many companies have started or got re-rated and have started discounting even multiples in earnings of financial year 19 and 20 itself in advance. So obviously the earnings have to catch up to match the kind of valuations that we are seeing at this point of time.
But you know what, Dheeraj, you are going to get a lot of money because it looks like the Indian proclivity to get into mutual funds is not ebbing anytime soon. So where will you look for value?
Well, Lata, in the mid-cap space that I run a scheme, or we run a scheme and I manage it, we have vast opportunities. I think if you actually see, there is the mid and small cap side of the market is a vast ocean of universe of companies. And we'll still like many companies across businesses, whether it is agrochemicals, in farm equipment, seed, crop protection, fine and specialty chemicals, NBFCs, India being a capital-starved economy, I think NBFCs across auto finance, CV finance, home finance, gold mortgage, microfinance, etc. offer value for compounding returns. We also like mid-cap cement space, and given the fact that the government's thrust on infrastructure should sustain. Print media, where we believe the economic revival should also lead to advertising uptick over time. Home textiles, mining companies, capital goods. So I think it'll be a myth to say that all the mid caps or small caps or the markets have become generally expensive. Okay. Yes, there will be some mild exuberance here and there, where some of the companies may have run ahead of time or ahead of earnings. And if the earnings don't match the expectations of the investors, they will be meted out with punishment. Okay. But we still find values across many businesses.
Okay. Dheeraj, hi, morning. I just want to delve a little deeper into that theme of NBFCs that you spoke about, because in your mid-cap fund, you have names like Mannapuram Finance, India Bulls Housing, Diwan Housing, a big chunk actually you're exposed to in the NBFC space. Some of these stocks have given great returns, Cholamandalam Investment, but do you see another round of re-rating for these names?
Well, Sonia, if you actually see, India is a capital-starved and underbanked economy, and credit to GDP ratio is still pretty low. So one has to decompose these NBFCs across many segments that you have spoken about. Gold finance, for example, that you mentioned, I think these companies have domain knowledge and connectivity and a competitive advantage versus banks and private money lenders. And the penetration of gold mortgage business is still pretty low in India. So there is a reasonable scope for these companies to grow time after time. Even housing finance companies have been offering 20-25% lending book growth. And the affordable housing space over the next 4 or 5 years again offers opportunity. And this space also has a good underwriting, underwritten companies where the NP levels are pretty low. So we still believe while NBFCs, the valuations have have been pretty strong in the last 3 or 4, 5 years. But our sense is that over the next few years, they still offer compounding opportunity, given the fact that the country itself is capital starved.
Dheeraj, good morning. The other issue that I've been talking about is how some of these domestic auto companies are beginning to get valuation of FMCG companies. I mean, Maruti is a case in point, TVS Motor as well. You think that's just justified?
Optically, on the near-term earnings, it is not justified because the valuations have exceeded the historical PE multiples. But I think the markets have started looking beyond 1 or 2 years of earnings. I think one has to take a 3 to 5 years view in most of these companies. I think people have started looking at longer-term view in such large-cap names. Yes, optically they may be expensive from a near-term earnings perspective, but our sense is that this is the way the nature of bull market is all about. The companies will continue to be expensive. These are quality businesses, high cash flow generating capability. The companies that you have mentioned, some of these names have increased the market share over time at the cost of foreign competition losing market share. So I think these will sustain, and if the investor is confident that these companies will survive and grow even after 2, 3, 5 years, they are willing to pay expensive valuation, and that's going to be the nature of many companies in this bull market.
Okay.